The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager. So retail traders are not driving Bitcoin's latest bullish surge, according to new data from market making firm B2C2. And joining us now to discuss is Rob Catalanello. I'm sorry, I'm mispronouncing it. Catalanello, co-CEO at B2C2. I got to take another stab at it. All right, Rob, thanks for joining us. Can you tell us a bit about the major findings of your latest data? So retail traders are not behind this latest surge.
Well, thank you very much for inviting me on the program this morning. And yes, our data shows that, if anything, our retail clients are actually better sellers. But for all of ever since the latest China announcement about Bitcoin trading and the legality of it, we've seen good outflows from our clients that face retail. As we are an institutional market maker, we don't face retail directly, but we do face various retail brokers and crypto exchanges that do. But that has been more than made up by inflows on the institutional side. So we would consider both our retail broker and our crypto exchange segments to be generally retail clients. We have two factors to our business. We have an exchange market making business, which we do significant amount of our volume on. But then we have over 600 over-the-counter clients, all institutional, that we do probably 30% of our volume. So net, what we're seeing is retail really sell, but the demand from institutional accounts, not only traditional crypto institutional accounts, but also the TradFi names that are now trading with us in crypto, really aggressively getting involved in the space. And most of that buying has been in Bitcoin and Ethereum, I would say.
Hi, Rob. This is a super interesting finding. Can you just break this down for us a little bit geographically, though? Because it seems like in terms of retail versus institutional interest, it must vary a lot by country. Like if you look at Japan, for example, Japan is almost 100% retail as far as I know. So I'm just curious, like how did you break this down across the world?
Sure. So we look at it in three different regions. We look at our business in EMEA, in the Americas, and then in APAC. And APAC, of course, includes Japan. It's funny, in EMEA, it's been pretty much split 50-50 sellers, buyers. But in the Americas, where we have a much more institutional account base, we've had a strong buying interest. And in Japan, really a lot of the flows that we have seen from our retail franchise. And we were very early in Japan, focusing on retail exchanges and brokers. That's where we've seen the most aggressive selling by that client base. So I would say, APAC's kind of leading the way on retail selling. EMEA, it's more split, but in the Americas, we've seen a dramatic pickup on the institutional side in buying.
So, Rob, what's the time frame that you're looking at with this data? Is it the past month, week? What are we looking at here?
Our crypto bits piece. That's a great question. Thank you very much. Our crypto bits piece was a mainstay of our offering. We've recently brought it back. But the data we're discussing today was for the week of October 3rd to October 10th, 2021. And we're going to continue to publish this on a very regular basis now.
What kind of what would you say is the overall narrative as to what's causing all of this? I mean, how much of this is related to some of the capital markets crisis, if you will, happening in China right now when it comes to the real estate market there and some of the concerns? I mean, are you seeing any of that in your data? And otherwise, how would you interpret all of this if you put it all together?
So that's a great question, and I would say yes. Ever since the announcement about the restrictions on crypto trading in China, and that kind of coincided almost with the rumors of default of various Chinese corporations, et cetera, we have seen very, very strong interest from our retail sector, as we classify it, really to just kind of liquidate crypto positions. And we really haven't seen it slow down. If anything, it's a steady, we've seen continued selling. But the very encouraging news, at least from where we're sat, is that institutional pickup has increased not only with us, but if you look at, for example, the CME basis or something, which is a venue that a lot of institutions use as well, that won't trade on an unregulated exchange, or who are in the onboarding process with someone like me, that's where they will go to, to execute their crypto business. And that basis has really been blowing out, signifying strong institutional buying.
So while the institutions are buying what the retail is selling, do you think that that's sort of a short term, just for the sake of providing that liquidity to the retail? In other words, they're saying, okay, fine.
I don't necessarily think so. I imagine that if we continue the bullish move, people that either got burned back in May and June, or who have recently sold, and as they get a better feel for what the actual ramifications of the news from China will be, will re-enter. So it's very, it's not necessarily that, that one is providing liquidity to the other. I don't think it's just, it's a coincidence, and it's actually very refreshing because, a couple of years ago, the sort of selling that we're seeing from either a whale or, like, remember the old whales, or retail, really would have really had a very negative effect on price action. But we're seeing it all be absorbed. And our belief is that as more people get comfortable with the space, as there's more clarity on regulation, that will only increase institutional participation in our markets. And it's something we look forward to.
So one of the goals of China's crypto crackdown is actually to rein in some of the smaller retail traders in China, right? That's what they're trying to do. They're trying to raise the barrier to entry for retail trade. Do you have any sense at all of the impact of retail trading in China specifically? I know it's really hard to get data on that, but just, what is kind of happening with that demographic? Because in theory, this crackdown should be targeted at them, right? Like making it harder for them to trade OTC. And we're not really seeing like the price move downward. And so it's kind of a black box in terms of the retail situation in China.
Yes, and unfortunately, that is a great question, and we didn't have that significant of a presence onshore in China with retail. So, it's really nothing that I can speak to directly, but I can say that the spillover effect in with our other clients in that region, has really followed through it, and that's where we're seeing the majority of our selling on the retail side.
Do you think, is there any part of that on the retail, on the institutional side, in the buying, and is any of that do you have any suspicion or any reason to believe any part of it is from China as well?
No, no real suspicion. Like I say, the majority of the institutional adoption that we're seeing is happening here in the Americas region. So either through your traditional sort of crypto participants, crypto hedge funds, or more importantly, the traditional finance types that are now have started crypto funds, or who have allocated a certain amount of capital to trade crypto. That's really where the buying demand has come from our perspective.
Okay.